Hello traders, welcome to another daily analysis. Today is January 10th, Tuesday. We are 10 minutes to 6 p.m. Eastern Standard Time. So today, as mentioned, it's a very quiet day because there was really no tier 1 data at all in both London and New York sessions. Yesterday, the Asian session, we saw the Australian retail sales came out as negative than expected, and I actually took a trade, which I shouldn't. It was a bit of mistake, which I'll go over later on. But however, the Chinese PPI came out as very positive. It's a positive surprise, regardless of the slightly negative CPI. So, nevertheless, what happened is that it definitely boost the Australian dollar. So as mentioned, that if you want to trade Australian dollar, and really have to watch out for the Chinese data, because I find out that the Chinese data actually have more effect for Australian dollar than the data from Aussie itself. So that's just something you have to take into consideration because of their spatial relationship of their trading partners. Today, is again, no tier 1 data. Sentimentally, equity market were mixed, with the oil actually dropped again to close near $50 per barrel. Now the drops, first of all, for the oil market is really just the doubt over the OPEC meeting again. Not the OPEC meeting, a doubt over the OPEC agreement, whether they can curb the output. So it continuous of the doubts. Really nothing new, happens right now. It just shows you how inconfident, investors or traders are in general for the OPEC, for this organization. So that's why if nothing happens, people tend to actually sell the oil just because it's just really uncertain. But of course, we did have the output increase news from Iraq yesterday, and you also have a lot of US producers actually increase their output because they are not an OPEC member. They're basically competitors. So right now, they are all looking to take advantage of this oil price recovery and also the output curve. So that's just, shows you how much it could be jeopardized, that really OPEC really has no control. I mean, back, in 10, 15, 20 years ago, there was no oil technology like we have today. And that's why, back then, the only places for oil is really in the OPEC members states, in the OPEC members countries. But ever since you have this shale technology, right now Canada and US really have enough oil reserve for its own. So that's why OPEC, of course, slowly lost its monopoly control. And that's why you see right now. And that's why, it's really, again, a lot of volatility over the oil market. Of course, people think they're still going to go up to at least $60 per barrel, because even if it goes to $60 per barrel, it's still very low. It's still low enough from the all-time high. But perhaps, the way it climb up, it's going to be a rough path. So that's just something to take into consideration. The market, again, seems to be mixed with positivity and negativity. And the only biggest reason is because Donald Trump is going to give the first press conference tomorrow. And right now, the market in general, especially for US dollar, it's a little bit uncertain with a solid fundamental. So what happened is that fundamentally speaking, everything is very solid. You have a good job report, good GDP, good inflation, everything is picking up very, very well. So really, largely what's affect US dollar right now is the sentiment. And the sentiment become uncertain as we are approaching January 20th, which Donald Trump will officially inaugurate it. So that's what really driving this uncertainty over US dollar right now, as people really don't know what kind of action, comments, or policy that will be implemented. So that's why you have this kind of uncertainty, maybe even a bearish movement in the US dollar for this week, or all the way from last week. So, but the general view, or fundamentally speaking, it's a very solid currency. So again, for me personally, if anything, make it deep, I will actually, take this advantage to buy US dollar. So for me, it's really not a bad thing to see it drop for now, because for me, that's really a chance to buy. So as you can tell, I'm still very bullish toward US dollar. But you do have to watch out for the news, because you don't want to get caught up on these sentimental on these drops by sentiment. So watch out for the news. Sometimes they are not show in the Forex Factory, or sometimes they are not scheduled. So if you have apps or news you can use, just definitely turn that on. But tomorrow, just to give you a heads up, you actually have a press conference for Donald Trump, will be at 11 a.m. Eastern Standard Time, and that will actually affect the market for sure. We just don't know which direction it's gonna go. So expect some volatility for US dollar. Now, for euro, the year started with consecutively positive data from European countries. So the economy seems to be well supported, and it's recovered. However, the largest risk is still the political unstableness among many euro countries. And that's really, it's going to be the main driving force for euro as for now. As you know, there's two major elections coming up. The Brexit talks is still up in the air. So all this is just the political unstableness. Of course, the ECB still has this easing policy ongoing until the December of this year. So that's also a fundamental weakness for euro. But euro, as for now, is really act as a counterpart for US dollar. So if you do see a negative sentiment into US dollar, of course, expect to see a positive buying into euro. But as for me, I'm not really looking to buy euro at all. For me, again, just waiting it maybe to climb up to a better position for me to sell it again. And the reason is because the general environment of euro is still in an easing cycle, and the political unstableness is providing to be more negative than positive. Whenever you hear uncertainty is always more negative than positive, right? Because you gotta understand, the big money investors are not looking to invest if the political situation is unstable. It's exactly what happened to Turkey right now. You have so many terrorist attacks. I mean, we are not trading Turkish lira, but just give an example. They have so many terrorist attacks. It's hugely affect the country's economy. Right now, the tourism has decreased significantly for Turkey, and the lira has dropped also significantly. It's just all these bad signs regardless of the fundamental, because whenever you have political unstableness, really nobody cares what kind of job data or CPI data you have. Really, people just want to flee the country. They don't want to put the money into a place that is unstable. So of course, euro is not in that situation, but in comparison, as you know, currency is always about comparison. As comparison, it is still more unstable than other countries, and that's what happened to US. The recent negative sentiment too. Nothing wrong with the nothing wrong with the fundamental data, but you have a little bit unstableness from the political side, and that's why you see a bit bearish move in the US dollar. For Canadian dollar, it's actually doing quite well. The housing starts today show a large continuous increase in numbers, and that especially is very significant for Canada, because as mentioned, the housing market is the largest sector for Canada. A lot of people think it's oil market. It's actually not. It's the housing, it's the real estate sector. So it's the largest sector in Canada. So that's definitely going to support the economy. Now, along with last week, we have very positive job data. Now, that also going to really sort of separate the correlation from Canadian dollar to the oil market. And that is a good thing. As mentioned, back then, if the economy for Canada is not good, then you really rely on the mercy of the oil market. But right now, if the internal strength is strong enough, then they are not that sensitive to the oil market. That means, although you might have the volatility from the oil market, you might still have a very well supported Canadian dollar. So as for now, it's actually a very promising currency. Another thing is the central banks, Bank of Canada already came out last year, saying that they are in a neutral position. So it means that they are not going to do anything until 2018. So they're not going to cut interest rates further, and that's just providing all this good aspect, fundamentally speaking, for Canadian, for CAD. So CAD is a pretty good currency actually for now. Australian and New Zealand both are in the same position. They both are quite positive for now, and really nothing happens to them. As mentioned, you actually have a negative retail sales from Aussie, but what happened is continuous of support from Chinese economy, also the recent weakness of US dollar. Now, as mentioned, people buy US dollar for a promising future. So if the US dollar is weakening, then investor will put their money in a high yield currency again, which number one, number two are New Zealand dollar and Australian dollar. So that's why whenever you have a little bit weakness into the US dollar, you will actually see it's actually going to help Aussie and Newsy. But on top of that, they are actually quite neutral to a bit bullish in terms of economic speaking. So they're pretty good, but you just have to watch out if we continue to have a sort of weakening in the US dollar or a lot of unstableness. Then of course that's going to hurt the financial market. Today it's mixed. That's why you have supported into a high yield currency. But if we have more and more bearish into the financial market, then that's going to support Japanese yen and Swiss franc. So that's what happened to Japanese yen and Swiss franc. They don't have any significant news, and they of course benefit a little bit from a recent negative sentiment. And we'll have to see exactly what happened to the news. If you have more unstableness into the US or Euro, that's going to help Japanese yen and Swiss franc. For British pound, as many of you know, the Brexit still is the dominant news, and right now it's become very negative because it's just a punch of uncertainty into UK. So again, our view is exactly the same, looking to short British pound upon any news events basically, and we are going to have one tomorrow, manufactured production from UK. So again, our game plan is still looking to short it upon negative deviations, and we will buy Australian, or actually no, we will buy Aussie against it if it's a negative deviation. So only trade it if it's a negative surprise. And that's pretty much it for the 8 major currencies. And if you want to know the manufactured production, you can take a look at my I think video from yesterday, which I actually lay out all the economic calendar maximum and minimum number for this week, the tradable one. So you can take a look at that. I will be ready to trade, but only upon negative deviations. Again, and tomorrow the only other risk events is the Donald Trump press conference, will be at 11 a.m. Eastern Standard Time. There's no real direction can be predicted, because this is not really a scheduled economic event. But in general, if you only if you like to trade it, but if you like to trade it, if you like to watch the events live, then the general view is that if you hear more comments about protectionism, anti-immigration, anti-trade, all these comments will be negative sentiment for US dollar, so you can continue sell US dollar against Australian or Japanese yen. On the other hand, if you hear comments about financial deregulations, the job increase, infrastructures, high interest, this is all positive sentiment for US. So you can buy US dollar against Japanese yen or British pound. Now, again, that's only if you want to trade it. If you don't want to trade it, if you're not interested to do this style of trading, you don't have to. But for me, that's just my game plan. I'll be watching the news conference to see if there's any tradable opportunities. Other than that, you do have crude oil inventory coming out tomorrow again, so watch out for Canadian dollar if you are trading that. And that's pretty much it. I don't really have anything. As mentioned, this week is relatively quiet. Second week of any month, it's always well, not really, but second week, because the first week of every month is always non-farm payroll, so that's really always an exciting events to trade. But what comes after is always kind of drifting away. Yesterday I did took the Australian trade, but it's really not a trade I should take, because the result, although it's negative, is not really a surprise. So looking back, I don't even know why I took it. Sometimes I make this kind of mistake. So nevertheless, the data came out as negative, so I shorted Australian dollar against US dollar. And I soon realized my mistake, so I decided, so maybe give it some time to play out. But I got out before the 8:30 Chinese data, and that was actually the right decision, because right after the Chinese data, it actually went up. It's not a lot, but it actually went up. Consider it's Asian session, so it's very quiet. So I got out at break even. But again, it's just a good way to think through how to trade risk events. It's really, everything is correlated. So be careful. Don't really be too single dimension in one risk event, because again, you might have a negative risk events, negative data from Australian dollar, but you might have a positive Chinese data, and that actually affect the buying into Aussie. So a lot of people first, especially myself, first trading this way, sometimes don't understand why a certain currency went up regardless of a negative data, because you gotta look at things in the micro scale. So that's what happened. Went up, of course, it's drifting down again, went up today. So it's really just a sideways movement. And let's take a look at our daily chart, and we'll see what happened today. Just give me 1 second. Okay. All right. So let's take a look at euro. So euro pound. So again, you have another bearish kangaroo tail, inverted hammer. Basically, it's definitely looking very, very good, technically speaking. But for me, again, I don't have enough fundamental reason to buy British pound and sell euro dollar. So that's why I'm not going to trade it. But I do admit it looks very nice, technically speaking. You are penetrated in this huge area of space. It's just a very good sign. But for me, it's still a no-go, just because I cannot find any fundamental reason to actually sell euro or buy British pound. Now, euro Swiss, it's again, it's a doji indecisive movement. It's mentioned, not really happening today. Euro dollar, same thing. Euro dollar is actually not bad. It's another inverted hammer or kangaroo tail. It's actually not bad to sell it. The only thing I have concern is really the press conference tomorrow. So again, I don't like to place a daily trade ahead of a major risk event. So it's not all risk events are created equal. That means if you have several risk events from US or Euro, you can still trade a daily trade. But if you have a very large one, then I tend to avoid putting my trade in, just because I don't want to get caught up in a trade. So I'm not going to take this trade just in a hindsight right now, just saying that I'm not going to take this trade because of the press conference. But it's a good sign. It's a good sign to sell euro dollar. So again, if tomorrow a press conference gives me a good catalyst to actually sell euro dollar, but I do expect this thing to not going anywhere from now till tomorrow, just because most traders I think alike, they're not going to place a large bet ahead of a major news event. So that's why I'm not surprised to see maybe it's going to get down a little bit and get out a little bit, a sideways movement until tomorrow. So, but for me personally, it's looking good, technically speaking, but I'm not going to enter it, but I might get into it tomorrow. So Euro Aussie, again, a bit downward movement for Euro CAD. It's again same thing, sort of indecisive movement. Euro New Z, same thing, and Euro Yen. But Euro New Z, on the other hand, you actually see a losing battle of New Zealand dollar. So it's an interesting thing to note it. Really nothing much coming up here. Really might be profit taking, might be anything. Pound Swiss franc, again, you have this sort of reversal signal. Sometimes it's not, I mean, of course, many of you traded this, sometimes a reversal signal does not give you a reversal movement, right? Sometimes it's just a sideways or continuation. So for me, again, looking at pound and Swiss is not something I like to touch. Again, don't like to buy British pound. Also don't like to sell Swiss franc. Cable, again, you have like this reversal signal, but fundamentally it's not something I'm looking to buy into it. Pound Aussie, so really similar movement. Again, it doesn't mean it's gonna reverse. It just says, it stopped dropping, pause a little bit. That's really the only thing you can basically take from technical analysis. And nobody knows what's gonna happen. It just gives you a probability saying that, hey, it's going to might stop, might go to sideways, or it might reverse a little bit. Pound CAD, exactly same movement. Pound Aussie, Pound New Z, and Pound Yen. So all very similar movement for British pound. Swiss franc, Japanese yen, really nothing to talk about this one. Dollar Swiss franc, again, you have a negative sentiment into US dollar. That's why you see all this right now. Sideways movement from dollar CAD and dollar yen. Dollar yen is really something I'm looking to buy. I'm just really eager to wait for a signal. So this is also something I'm looking to trade tomorrow upon the press conference. Dollar yen along with euro dollar. Now euro dollar, of course, you do have this nice bearish candle that a nice to sell, a nice signal to sell. But for me, I'd like to wait to trade it upon tomorrow's conference. Aussie Swiss, Aussie dollar, you see it continue climbing up of Australian. So Aussie, it's really quite strong, for this week. Aussie New Z, it actually continued to go up. So tomorrow, as mentioned, yesterday, as I was mentioning, that this is a nice bearish kangaroo tail inverted hammer. But you see what happened. I was saying that I don't like to get in because of the retail sale and the Chinese CPI, and I like to see what's happening. And of course, by doing that, I avoid a loser. So if I had gotten just purely because the technical signal, then I would really either got stopped out or be in huge trouble right now. So that's just something, in take into consideration. If you just simply prepare and look at the economic calendars, then you really can avoid a lot of uncertainty. So that's just, but of course, sometimes it works in a different way, and then you miss a very good trade. So that's just really depend on what's your risk appetite, basically. How would you like to approach the market? So for me, I do like to approach the market this way. Personally, for me, I just don't like losses over this kind of fundamental movement. So that's just something to take into consideration. And Aussie yen, again, a nice bearish kangaroo tail inverted hammer, but it's definitely not something I like to do, to sell Australian dollar and buy Japanese yen. Swiss, it's really a range sideways movement. Yen, same thing here. New Zealand Swiss, New Zealand dollar, New Zealand CAD, and New Zealand yen. So that's pretty much it. Now, I'd like to take a look at Canadian dollar. It's just because you look at Canadian dollar versus all other currency. EuroCAD, it's a winning battle for Canadian dollar. pound CAD, of course it's a losing battle for Canadian dollar, but it could be just a profit taking. Most significant is dollar CAD. Now, it's very interesting to notice that it's a little bit a small candle for CAD pair right now, but CAD pair for today. But oil market had a large drop today, so it just shows you as I mentioned, the correlation. It's start to maybe separated a little bit for this week, of course. But that's just show you that it's a good sign if you're looking to buy into Canadian dollar. It's because back then it's really sensitive to the oil market, and the oil market changes every day. It's very volatile. It really cannot tell where it's gonna go. But right now you start seeing this kind of separation of the correlations, and of course it first of all comes from a good economic release from Canada itself. Last Friday you have a good job data, and today you have a good building the housing starts. So that's just a good fundamental support for Canadian dollar. So that's just a very good thing to notice, because if you want to buy Canadian dollar now, you really have less risk from the oil market. So if the oil is doing bad, it's doing badly, it's not going to affect Canadian dollar too much. But if the oil is doing good, then it's going to help Canadian dollar. So that's a really good fundamental factors to take into consideration if you're interested to buy Canadian dollar. And for me, Canadian dollar is a very good currency actually. As for now, of course, the number one is still US dollar. Number two is Aussie or CAD. But CAD, it's at least for now. For now, it's getting more and more in a better position. So, of course, we still have to see if we have any signals coming up. So again, that's it, guys. I don't really have much going on. I know that again, just a second week of January of this year, and of course this week is kind of slow. So things might change tomorrow. Watch out for the press conference, and I also trade a British pound later on in London session. So that's it for me. Again, if you want to trade that, I do have the maximum and minimum number, I think, from yesterday's analysis. So right here, again, maximum is 1.2%, minimum is 0.1%. So I'm looking to sell upon anything lower than 0.1%. And that's it, guys. I don't have anything else. If you find this video helpful, that's good. If you have any question, feel free to let me know. Otherwise, I'll be back tomorrow with another daily analysis. I'll see you guys. Thank you for watching. See you tomorrow. Bye bye.